The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, today is story day, folks. I got to change the format here a little bit. One of my favorite books, of course, is Reminiscences of a Stock Operator by Edwin Lefevre, which is basically the pen name of Jesse Livermore. And some of the stories in that book are really, really great, and they give us great lessons. Well, I've got a story that I have to tell you. It's going to take a little bit of time, but it's worth every minute, I think. If you don't like it, then come back in 15 minutes and we'll start the charts. But in 1964, one of my best friends bought a house in Santa Monica, California, right off of San Vicente Boulevard, one of the nicest places you could live in L.A. And they paid $68,000 for it, which was a huge amount at that time. It was built in 1929. Move fast forward, 1995. He and his wife, Liz, are retiring. They're going to San Diego to live. Liz was one of the reasons why Ronald Reagan was elected governor. She also worked very hard for him for the presidency in 76 and 80. And when 80 came and he got a president, they were invited to the White House, not only for the inauguration, but they got to spend the night in the Lincoln Room. But let's get moving on. Anyway, they moved down to Santa Monica. They sold their house there for a lot of money, and now it's worth 3 times a lot of money. But they bought a really nice place in Rancho Santa Fe, a very, very lovely suburb of San Diego. And they asked me to come over. It was about 8-hour drive from Tucson, so I went over. And I spent the weekend there with them, and we had a great time and everything. But as we were one of the days, I think it was on a Wednesday. No, it was a Thursday, because I spent Thursday, Friday, Saturday there. The guy was cutting John's grass, and he hired a new guy, and he was from Mexico. He came over the border every day, went back over the border every day. He had 3 kids. I'll never forget his name. His name was Pepe Delgado. And I still think that should be in the name of a Mexican restaurant. But he was a nice young fellow. He's in his late 20s, had 3 little kids, and just a really nice guy. And we were out there talking to him when we were sitting there having a glass of wine. And we asked him, how's business? He says, business is good. He said, I put all my money into the stock market. And I said, do you know something about the stock market? And he said, no, but I cut the grass of the man that's one of the big executives at Qualcomm. And he tells me to buy the stock. And I said, how much have you bought? He says, I bought about $8,000. So this is 1995. He says, I bought about $8,000. He says, every time I have money, I buy some shares of the stock. And I said, well, you should read a little bit about this stuff. And so I sent him a couple of books. I sent him Livermore's book. And I also sent, I can't even remember the other one that I sent him, just to, try to warn him, about what was going to happen. Well, as luck would have it, he kept buying Qualcomm, and Qualcomm kept going up and up and up, 95, 96, 97, 98. And now he's got a great deal of money. He's got well over $250,000, starting with $1,200. Can you believe this? He's got $250,000. And I said, this is more money than you're going to see in many lifetimes. He said, no, Dad. He says, but I really, he says, I need to make $1 million. And I said, why do you need to make $1 million? He says, well, he says, if I make $1 million, he says, I can bring my mother and my father and my family, to live here in the United States, because you could buy a home and that gave you your green card, and that led to your citizenship. Well, anyway, as luck would have it, he found out about the options market. And you couldn't talk to him about anything. But anyway, he started buying options, and Qualcomm kept going higher and higher and higher. Now I'm going to show you the chart of the Qualcomm during this time, just so you can get a quick look at it here. Give me a second here, move it out of the way. And you'll see here that we're now into 1999, near December 1999. and I have to go back to San Diego for a New Year's Eve party for Larry Williams, who had just bought a house right down the road from where John and Liz lived in Rancho Santa Fe. And so it's a very nice place to live. But anyway, as we're down there, this was on, like, I went over like for 3 days, and I happened to run into him again. He's still cutting the grass. He's still working hard. And I asked him, I said, how are you doing? He says, well, I'm very, very close to the $1 million. And I says, what are you going to do when you get to the $1 million? He says, I'm going to sell. And I said, Pepe, are you really going to sell? And he said, yes, I'm going to sell. The Thursday before the Friday before New Year's Eve of that year, there was a young man named Walter Pychek. He was a analyst for Thompson McKinnon, I believe, and he came out with a upgrade on Qualcomm, which was trading at $600 a share, and he gave it a price tag of $1,000 a share. And I told John, I said, get in touch with him. I said, because this is the time he wants to sell it. So he called him up and he said, this is what you should do. And Pepe said, thank you very much. And the stock was due to open $120 higher, from 600 to 720. Well, what happened was the stock opened at 720. That was the high. And from there, it dropped all the way down to about 45, I believe. Now, do you want to hear the moral of this story? The little dude sold on the opening of the high tick. He got over $700 a share, and he called John. He said, how? He said, I put my order in to make $1 million, and they gave me $1,125,000. How can that happen? And John said, only in America, Pepe, only in America. And that's the name of that tune. So it was really an interesting story. There's another part of this story that I've told on this before. I happened to be short that stock that night at $600 a share because it was making a 3-drive to a top pattern. I had an account with John's friend, who was former ambassador to Saudi Arabia, and I traded his family account, and we had done very well that year, had made a great deal of money, and I had 200 shares short, so I was going to be stuck 20 large on the opening. And so I called him and I asked him, what we should do. And he said, look, we had a great year. He said, give it an hour. And he said, if it's still higher, he said, let's just call it a year and then move on. And it opened on the high, immediately dropped $50 or $60, and we ended up making a couple $100 on the trade. But that's the story. Remember that just when you think that you're going to, make a lot of money, sometimes, great stories really do happen. Now, you want to know the sequel to this? He never traded again. He did bring his family back. He owns about 12 different trucks now that he has all over the San Diego County, and he does a great deal of business doing landscaping, which he still does. And he's in his 40s now, and his kids are in college, but he made his money and moved on. Now, there's one more part to this story that you're not going to believe this next part, because this is the really funny part. And we'll probably have to do that at the break. But you want to hear something, you're going to have to love the government on this one, because it's really a funny story. So we'll cover that right when we get back from the break, and then we'll get to the charts, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, now this is the final chapter. About 6 months after he closed the position, he gets a notice from the Securities and Exchange Commission questioning unusual activity in options, because he had made $250,000 in options on his Qualcomm, which is unusual. And of course, he didn't know what to do. John called me, and I said, all you got to do is write a letter explaining what you had done. Probably they won't do anything about it. And so we had some friends at Gibson, Dunn & Crutcher, which is one of the large firms in the Los Angeles. They handled the Reagan's all of Reagan's business, but we knew a friend there who had one of the greatest names. Well, I won't go into that. That'll be another story. But anyway, he wrote a nice letter and explained to him what he was doing, why he did it, and they sent it in, and they were never questioned about it again. He paid the taxes on it, and that was the end of it. Since lost contact with him because he lives in a different part of the San Diego area, but very nice young fellow. Okay, let's get on to the markets here, folks. We've got a market that is ripe for buying, and I know a lot of you folks have been watching this for quite some time. So let's just take a look here at the crude oil market. Let's just give it a quick glance here. We'll watch this very, very closely. You'll notice here we're almost at a 382 retracement. I think we're going to take out the low that we made yesterday around that 45.80 area, but I think we're going to hold at 45.50. The reason why is that's the perfect 382 coming off that August bottom. And you realize that, we've been in a 2-week correction. We've got a couple of nice ABCD patterns in here. So just kind of watch that. That's very similar, to what we were looking at yesterday. And thanks to our good friend, Mr. Z, in the room, when we were watching cattle. I don't know if oil is going to act like it, but many of these things do act alike. You'll notice that when cattle went down below that 105 level, that would be equivalent to making new lows in the oil. And then you'll get the reversal. So keep an eye on that, and I'm sure Mr. Z will be keeping an eye on some good price action for you. So watch that, because that's a chance for a pretty good correction to the upside. And oil moves in increments of $2 or $3 very, very quickly, and your risk on this is probably going to be less than about 60 points would be my guess. So just keep an eye on that. Several people have asked about the what you call it that we're looking at here is the they're talking about the gold now, but did a great job on that, Mr. Z. I appreciate that very, very much to let the folks keep an eye on that. But the oil could do the exact same thing. Watch that previous day's low right around the 45.80 area. It'll take that out by just a little bit. And if there's no selling there, that's right at the 382 with all of these ABCD patterns. That's the kind of Mother God and Country stuff that you'd really like to see. So watch the oil market very, very close. As far as gold and silver, they're under some more pressure again today, but silver is acting actually a little bit better than the gold. I would like to see the silver get down to around the 1807 level. This is December silver that I'm looking at now. So, because September is going to be going off the board here very, very shortly. So keep an eye on that. I still believe we got a chance for a big spike down in gold, but a little below 1,300, and that should be a pretty good spot to buy it. And folks, you got to be looking to be buying it here for several different reasons. One, the correction is pretty much over based on some of these patterns that we're looking at. Plus, we're looking at a new moon and a solar eclipse starting tomorrow. And, of course, this was the anniversary of Princess Di accident, back in 97, I guess it was. But that was a very, very sad, very, very sad thing to go on. Okay, now I wanted to move over. We talked about the DAX. I did wanted to show the shorter-term picture on the DAX because it's going to be very, very critical here that the DAX hold this. Hold this here. Yeah, it's 5:30 in the morning tomorrow is the exact solar eclipse. So that's, or just right after on the air, so we might get some action there. But as you can see from this German DAX, there should be some support down here around that 1,600 level in the DAX, but 10,600. So watch that one really closely. The one that's the best from a technical standpoint is that oil. That oil really looks ripe. I mean, that's just got a lot of good things that make it look, very, very interesting for sure. The other reason we want to watch this is if you'll notice, we're going to take a quick look here on back to someone's asked, the jobs report comes out at the exact time of the solar eclipse. Shut the front door and raise the rent. Boy, that's going to be a woo. Thank you, Marshall. Boy, that's going to be very, very interesting. Wow. Well, see, there's a perfect example of how astrology makes the markets move. Well, if that's not a crock of baloney, it's because of that jobs report. Jobs report is on Friday, I believe. Yeah, it's Friday, unless they change. Oh, it might come early because of the holiday. It is Friday. Yeah, the eclipse is Thursday. Okay, Marshall, you're going to lose 3 points on your study list, but that's okay. You did a good job telling us it was 5:30. We still have some good volatility tomorrow, no matter what happened. Marshall, I made a mistake once. It was back in 1948. I think I bet on the Giants against the Yankees or something. I don't remember what it was. Oh, never mind. Yeah, well, something like that. Okay, let's move on here and stop being funny here and get some things here we got to get out of the way. Let's take a look here at the U.S. dollar, folks. This has got to be, you want to see a bullish chart, and we have a guy in the room there named Thomas O'Brien who led us to the promised land on this one many years ago. But let's look at the long-term dollar chart here, going back to 2011. If you remember, 6 years ago, Tom, when we were trading around 73 in the dollar, he started talking about King Dollar, and he kept talking about it all the way till 2015. He's probably still talking about it, but look at these two boxes that are in here, folks, these two red boxes. Look at the long period of consolidation, 2012, 2013, 2014, and then has another move. Now we have 2015, 2016, and if we get above 101, folks, this U.S. dollar could go to 140. And that's not unusual. And that it would be equal to what we think that the euro would be heading down, towards par, which is our long-term forecast in the euro, which is at 99. And remember, the euro's had a lot of swings through the years, starting back in 99. It came out at about 120. It went down to 84 to 160, back down to 90, up to 150. 55 back down to 85. So the euro is one wild and woolly trading vehicle. So watch the dollar, because if that dollar index clears that 100 level, boy, we're going to be in a whole different ballgame. And that's not going to be good for commodities, folks. And that could be a real interesting thing. The thing that you have to worry about with the commodities is the fact that, yeah, we did have one hell of a run since December. But if we take a look here at the XAU, you notice all that did was make a 382 retracement to almost to the exact penny from the high that we made back in 2011. Now, I know it's a heck of a rally, but, you know, it should have gone a little higher than that, was my guess. Take a break here, 877-927-6640.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we are talking with Larry with TFNN, also known as Billy Ray Valentine of the Duke & Duke firm. Folks, we're looking here at the dollar index. As you can see, it's really a beautiful pattern on the bottom here the other day, as we had a beautiful pattern on the top. The key here to watch is this level made back in July, because if we get above that 99 level in the dollar index, I think it's going to run. And we came out of here very, very fast. We are near some support in some of these things, but frankly, they do look like they want to go lower. That would also mean that crude oil is going to go lower also, because if the dollar strengthens, that usually means that oil is going to go down. There's a pretty strong correlation with that. So the key support that I see is at 45.40, 45.50 in the oil. And if we go below that, I mean, I don't think you'd have to risk more than about 60 cents below that if you wanted to take a nibble on it. But it's certainly in a bull market from January. This is the second big correction that we've had, and it's right at a 382. And also you got the lunar stuff coming in, so this is when you get a lot of stuff working. And don't forget, we have Mercury retrograde, which means you have a lot of misinformation coming out, and that includes this show. So remember, you got to take responsibility for your own trades. But just based on that, it looks like a relatively low-risk entry point in the oil should we get to that spot. Now, this morning in the stocks, it looks like we're going to be opening a little bit lower. Have you seen from the other markets across the globe, they're weakening a little bit. Germany's holding up better than anything else, but the key number to watch, of course, in the E-mini S&P is this area around the 21.55, 55, 57 area, which we've been to several times. That would tell us that if we get below that, then we probably getting ready to move to the downside. I think the key to this lies in that volatility index, and I believe that everybody should have one call option in that VIX index for November, maybe a strike price around 13. It's not selling for very much, but that would be good insurance for the next 6 or 8 weeks, because I think we're going to see incredible volatility here. We haven't had any, and usually that means it'll probably turn around and move to the other area. So I would watch that very, very closely to try to make sure that that you have a little bit of that for protection. Long term, you've asked me, several people have asked me just a few minutes ago, long term, how do I feel on gold and silver? I still think they look good long term. We have to see what this next bottom is going to be. We've been expecting it to come in around 1275, 1285 or so in the gold. We're $30 away from that right now. That's a heartbeat, folks. And we're only about 50 cents away from the number in silver at $18. So those are the ones that would be watching now. Because of the jobs report on Friday, and we get some really crazy stuff, I would really be expecting the gold and silver to rally after the jobs report, no matter what it is, because it's going to be very, very oversold if we keep this up for 2 more days. So you'd want to be watching the opposite side of that. And what we'll try to do on Friday is have some expansion numbers maybe to take a look at. I posted the one for silver in here at 1807 in December silver, but that's just one of many. So we're selling off very, very marginally in stocks today. It's still quite early, and we have no volume, folks. I mean, there's just really not very much going on at all. So it's still quite a bit early, to make any assessment of what might happen today. But each time we've rallied here, we've rallied by less and less. And remember, the leader of the pack on the way up here was the NASDAQ. And if we bring up the NASDAQ, you'll see that this week, even though it was the leader of the pack last week, has been the laggard. And it's rallying less and less than we are in the S&P 500, and then it's followed by the Dow, and then finally the NASDAQ is pretty much the same way. Okay. We've had a question about a couple of stocks that I want to cover here. First of all, I want to give you an idea. This is the stock of Nike, and I want to make a comment here. Those of you that wear Nike shoes or New Balance, you should really take a look at this new shoe that's out called Skechers. The old cowboy from Tucson sprung for $37, and I bought a pair of these. Usually I pay about $130 a pair for the sneakers that I wear from New Balance, and I got a pair for $37, some sneakers that are twice the shoe that you get with New Balance. And it's just really an amazing sneaker. I don't know which model it is. It's got the S on the side, but it's I don't know which one it is, but it's like you just go to Amazon. Well, I shouldn't give Amazon a call here, but anyway, that's really a good shoe. It's really, really, really far superior to both of those shoes. So give it a shot if you need a pair of shoes. And they promise to send me my commission when this is over, but we'll wait and see. One of the problems of doing a radio show, folks, is you're trying to fill in a lot of time. Yeah, that's right, Marshall. I am getting paid for the ad. Very good. I imagine the check is going to come any day now, but they are really, really great shoes. I just can't tell you how happy I am that I got a new pair of shoes. But they're very, very comfortable. They're incredibly well made. I don't know if you folks know this, but you know that's the highest markup of anything in clothing are the tennis shoes. Are you aware of that? Does anybody want to guess? Let's take a guess here, a little bold. Do you know how much it costs to make a pair of Nikes? Take a guess. It's under $1.50. Yep, it's just under $1, just under $2. You're right. And guess what? The most expensive part of it are the shoelaces. That's the most expensive. That's more than 30% the cost of the shoe is the shoelaces. So this is real, and they sell these puppies. Look, they sell some of these Air Jordans and stuff for an arm and a leg. The average Chinese worker, I believe, makes about $10 a day now, but that's not like our day. Their day is a 16-hour day, and they sleep at the factory. They work 16, sleep 8, work 16, sleep 8. And that's pretty much what they do. And there's a line of people around the factory waiting to take a job for those that can't make it to the next day. So it's really, it's very, very competitive over there. And of course, they have a lot of low-paid workers. When the Chinese people are able to become consumers, they will be the leader. Hey, we've got a caller from Clearwater. Dave, are you there?
How are you, sir?
I'm good. How are you, my friend?
I'm doing all right. Bringing back some memories back in my days when we were setting up some facilities in China. For the company I work for, it's skilled labor. It's
sure.
Custom built industrial equipment requires machinist skills. And there's tons of people lining up for that job, but not tons of people that actually can do the job. But that was the thing that absolutely blew me away in my time over in China was just the sheer volume, everything. The scale is just amazing.
It really is. Stay with us, Dave. Stay with us. We got to pay a few bills, and we'll be right back with you. Okay?
Awesome.
You bet.
Thanks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Dave out of Clearwater. What can I help for you with today, buddy?
I was wondering if you would take a look at December wheat. And
sure. I'm going to put a monthly chart up here because, it's in a free fall. And when markets, collapse like this, what I try to do is to go back longer term to see if there's another pattern out there. And I can see about another 8 or 9 cents lower. We should be at a pretty good ABCD expansion. The thing that we got going for a rally is the fact that we've got this new moon and eclipse coming here on Friday. But frankly, you're in a Friday in a down week. It's going to take one heck of a kick in the pants to get it to reverse. But there is some support down here at about 390 in Christmas wheat.
Yeah, that's what I was seeing. Because it looks like there's a couple. Although I didn't put it on a monthly. Let me just state that for the record. It looked like there's a couple actual, like a complex, I guess the right term to say is a complex Fibonacci ABCD pattern moving down. From what I can tell, there's the one that began the big move down back on the 9th of June. And then, your A point, and then we got a B point on a big one at, July 5th, and then your C point, what I'm seeing at least, on July 13th, and then the rest will move down, and that looks like it wants to take it down further. But then, as you make that move down, I think you pointed this out last week. I don't know. Unfortunately, I can't catch your show every day, although I really do enjoy it. But it looks like, it started a couple other ones with that July 13th being another A point, B point showing up on the 20th, C point on the 25th. Looks like it's close to on that ABCD. It looks like the C to D legs a 1.618 expansion of the A to D coming in at around 390 plus. In addition to that, I'm seeing on the 30-minute some price RSI divergence, a nice little deal I picked up and learned from Steve Rhodes. But it's in such a free fall. I mean, I'm long right now. I've got about 3 or 4 points in at the moment here, but here's one of those, I'm a chicken bowl, you know what I'm saying? I'm like, I don't know about this. You know what I'm saying? So that's why I want to get your input.
Well, you've got I think that 390 level is good. I mean, you don't have to risk an arm and a leg here. I tried wheat earlier in the week and lost, but I'm waiting now to see what's going to happen. When my strategy is going to be a little bit different. I'm going to let the market have its first kick up and move up to see what kind of rally it's going to get, and then I'll watch that retracement, because when I take a loss on something, even though it's wheat and it's not a lot, what I'd like to do is to sort of reinforce the pattern. In other words, the original pattern that I thought was going to hold at 411 went 20 cents below that, and I certainly got out long before that. But now what I'll do is I'll wait to see what the pullback will be after we have the first rally. Or, like you mentioned, if we get down a little bit lower around 380, there's going to be a 1.618 expansion down there, and then I might nibble at it at that point. But that's primarily what I'm looking at.
Okay. And like a lot of your listeners, I want to say I really enjoy your reflections. Really do, man. They're you got to write a book, Reflections of Larry Pesavento in my 4 or 5 decades of trading.
I have a file over here that I keep. I've been, it's going to be my autobiography someday that I write it. But the problem is, you lose money writing books, because as soon as you write a book, it's out on the internet free, because the people just take your intellectual property and resell it. So there's no incentive to write a book anymore like there was 4 or 5 years ago.
Sure there is, man. You got to look at it. You can't look at it as writing a book, in my mind at least, for whatever this is worth, Larry. And in the 21st century, you can't look at writing a book as how I'm going to make money. You look at it as like an artist. I'm going to put out some wisdom there, and for the benefit of all who care to take a look at it. And one of the things I also enjoy is, I guess there's some ties between you and President Reagan. My father, operated fairly decently in the Republican Party, and he's just got, him and the stories that Michael Deaver told my dad, and just what an amazing person, absolutely. Amazing. Even whether you're Republican or not, just Ronald Reagan, the life he had, and the things that he accomplished was the all-American success story for sure.
Yeah, and he was a bigger underdog than Trump is right now. They really didn't want an actor as a president, but he turned it out to be, pretty good. But who knows? Well, hey, listen, thanks for calling in, pal. I really appreciate it. It's always nice to talk to you. You bet.
Take care.
You bet. Those intellectual properties are tough, because, I had the same thing when I was writing my music. I wrote the music Satisfaction for the Rolling Stones. They didn't give me any credit. I wrote several of the gold hits from Neil Diamond and also the Beach Boys. I never got any credit for it. So I just quit writing songs. What are you going to do? And if you believe that, I still have 2 shares of the Brooklyn Bridge. Let's get back to the markets, folks. The key levels to watch. We are looking at 2155 in the S&P. If we get below that 2155, we're going to be in serious trouble. The key market to watch through all of this is to look at the VIX index. Buy yourself a November 13 call. It's not going to cost a lot, but you're going to be able to protect yourself over the next 6 weeks. This thing is at historical lows. It's moving up a little bit, but this has got a chance, folks. It really does. And the reason for that chance is the fact that we've had a lot of divergence up here. Even though we made new highs in the S&P and we made new highs in the NASDAQ, we did not make new highs in the market. The New York Stock Exchange Index never violated that. And so that's another reason to look at it. Plus, we're over this really strong seasonal of September, October. That could also be interesting. So the cost here is very small. The profit potential is quite high. I equate this to, when we were looking at gold, when it was at 1030, nobody wanted it. And we were talking about, buying those, silver rounds at $14. And, they're up over 50%. From where we were first talking to him, and I still think they're good. I still think you should buy some silver, flat out, regular silver, the silver rounds that are printed by the U.S. Mint, because those are the ones that are the really key thing, to look at. But we've got this real strong volatility coming in here today, tomorrow, and also on Friday with the jobs report. So it's going to be rocking and rolling everywhere. We'll try to look at some expansion numbers. I'm not sure. We're only about 40 cents away from that number I'm looking at in the crude oil. It hasn't rallied very much, but hold on for that 45.50 area. That's what I would be looking at. It's down about $0.50 from where we are right now. It might not hold, but anything below 44.90 would tell us that the old cowboy from Tucson, needs to put on a new set of spectacles, because that will be a failure. So it really should hold that. And I'm just looking at an hourly chart, and the fact that we're down there looking at yesterday's low, there's got to be some stops just right below that. and those should be filled, and then that's where the market should reverse, much like we looked at in cattle yesterday with the help of Mr. Z. But that's the kind of thing that you want to be watching here. And then when we get back from this next break, we want to review this VIX Volatility Index and also take a look at this New York Stock Exchange Index chart.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we had a caller from Boston that asked a question of which of these VIX index you'd be using. Keep it simple. The volatility index VIX has calls, and I believe the November calls they were selling. The November 13s were selling about 15 recently, and I think they're probably still close to some. Jay, are you there?
Yeah. Hi. Hey, Larry.
I didn't tell me they just said you'd called in. How are you?
Hey, fabulous. Thank you.
Yeah, take a look at the VIX, the volatility index calls. They pretty good. Not a lot of volume, but enough to handle some small orders, I think. But they have some calls there, and usually when you buy a call, you have no chance of winning. But this gives you some insurance. That if the market does turn, this thing could triple or quadruple or go 10 times in price if it gets really crazy, and we're over a real strong seasonal here. So I think it's worth a shot.
Yeah. Any of the other vehicles, like either a couple of ETFs?
I don't know those ETFs. I don't like them. I don't. There's another way of playing the market options to me, and I don't like that. I'm just taking a shot here at the volatility. In fact, you could, if you wanted to, you can buy the VIX futures, and that's another way to go. But the calls are the cheapest as far as the amount of risk that you have to take. You're risking just a few $100s to see if it's going to work.
Yeah.
And someone's mentioning in the room here that the VIX volatility ETFs don't follow the VIX, so I wouldn't touch it.
Yeah, so this trading symbol is VIX.X. Does that sound right?
Yeah, that's the one. That's the one. Yeah, you want to look at the calls on that one.
Yeah, and just look at November 13th.
Yeah, November 13th would be pretty good. You're going to have to pay a couple of dollar premium, but a couple of dollars in that market, they go pretty fast once they go.
Oh yeah, the rocket fuel.
And also to the downside. And if you lose half your premium, we're probably going to be wrong, and you could just put a Band-Aid on it and wait for the next time is the way I would look. So don't lose more than half your premium if you're going to do that.
Yeah, just dump them. Yeah.
Yeah. Terrific. All right, thanks for calling in, buddy. Appreciate it.
Yeah, thank you.
You bet.